Good morning. This is Steve. Good morning. This is Steve O'Hare from Signal Centre, and welcome to I think it's edition 473 of Talking Ball. I'm on my own for most of this week. Joe is in Cyprus until Thursday on a little bit of a jolly up. Not really. He's at the IFX show. So you're left with me for this week, and I'm going to do my best to take you through all of the asset classes we cover. We'll start obviously with a little bit of a rundown on what we are seeing at the moment. Let's just talk about the market highlights. So a volatile mixed session overnight. This is Sunday night, has been seen. The Hang Seng has fallen over 2%, while the Australian ASX rose 1%. Chinese banks are closed for a national holiday. They're thinking few. The focus is on Hong Kong markets. Anxiety has been building in the early hours, with Evergrande default fears growing after shares in the stock and its property arm were suspended from trading. However, news is emerging that Hobson Development could be involved in a bid to secure 51% of the Evergrande property unit for around $5 billion. With the firm facing a number of debt payments in a bid to avoid default, this sale could provide crucial cash flow at a time of crisis. Elsewhere, the US has warned of a potential raft of tariffs after the Chinese failed to comply with their side of the trade agreement. Energy and logistical difficulties continue to provide a backdrop to markets at the moment, and thus today's OPEC meeting should bring potential volatility, with the US shale producers seeing OPEC as the only vehicle able to ramp up production and avert the squeeze that is building. Though keep an eye out for US factory orders also. That was thank you for that. That was IG's morning call. And we're going to dive in now to the analysis. And let's start with FX. This is obviously normally Joe's bag. I'm going to dive in there. We are at crucial levels. Joe's been talking about this for a while. We've broken down through the neckline. We had around about the 116 level. So that's a crucial area now for prices to hold. If they fail to hold, we don't expect them to hold. It feels like we are going to move lower in euro dollar strength. Let's look at the daily chart on here, and we can see that Friday's recovery was somewhat of an inside day, so didn't really manage to get above Thursday's high. However, we have done overnight and this morning, although not by a huge shift. So still the pressure on there. If we look at the 4-hour chart, there is potential for an inverse head and shoulders, which could see us look to the measured move target for something like this, from 115.62 up to around about 116 would be around about 40 points measured move target. So looking around about the mid 116s to sort of target there if we manage to break above the neckline. Cable showing the similar sort of formation. We can see, I'll draw it out for you just to give you a little bit more color on this. This is the sort of thing we see from head and shoulders formations. That sort of thing. So again, a little bit of recovery, bit of a bullish flag maybe forming on the 4-hour chart in cable. Looking at the longer term charts and weekly charts in cable, we got 135.60 providing that support. We managed to penetrate it quite aggressively, got down to 134.13, and have staged quite a decent recovery from there, almost a whole cent, and we're back up at 130.560. Not bad recovery really. The dollar index obviously pushed higher. 94.74 is the target. And we can see the sort of like last 5 days of price action have been pretty positive, with breaking above the resistance at 93.43 and continuing higher, although we are seeing a minor retracement pullback, just maybe a small correction. Dollar yen still looking pretty good. We've bounced away from this really long-term downward trending resistance line, which we broke all the way back in March and retested and closed below, but then managed to creep back above in April. And since then, we've plodded along nicely sideways and really looked to sort of like push higher last week. That was a decent week, but stalled in front of the 112.40 resistance. A further attack on that sort of level is expected this week. Aussie dollar has played out really nicely. This was the head and shoulders formation that we picked up, played out really nicely. The measured move target looks like it was down around about, or the next real level of support is down around about 70 cents. So 72.64 trading there. Bit of indecision over the last few weeks, but again, expect that to move lower. Let's talk about cryptos now. What's going on in the crypto space? We saw a decent recovery, and that gave us a really nice bullish engulfing candle on the weekly chart. Looking at the daily, we obviously saw Friday the big rally higher. We talked about it in the Talking Bull show in the morning, the potential for that once we get above this 43,800, and it placed nicely higher, just stalling in front of the 50,000. That's a big psychological level. And although it's a little bit of a toppy looking candle from last night, from Sunday, obviously trades over the weekend, and a little bit bearish this morning, still mildly positive on Bitcoin on the back of that. We also saw Cardano. That we had a measure move target on that on 230 from the double bottom, which was formed here. Double bottom formed, and we did call out a level around about the 229, the 61.8% Fibonacci retracement level, and it's got up there, just traded above it. And as with these Fibonacci levels, they tend to be good target levels, but also decent resistance levels, and it's faded from there, coming back to around about the 215 level. For me, that's quite a pivotal level in Cardano, so watch out for that. Ripple, that's broken up from the triangle formation, although we have posted a bearish engulfing candle on the 4-hour chart, and this has been followed through with further selling, and so that looks to be on a little bit of the back foot at the moment amongst the cryptocurrencies. Let's have a little look at commodities. Crude oil, as we said, is looking pretty smart at the moment. We see the weekly chart. We've talked about this level around about the 76.47. This is WTI crude oil. Brent crude oil has a level around about $80, which we stalled at and reversed from last week. So that's the level to watch in Brent, that $80 level. Still looking positive. We've had 4 positive weeks now on crude oil, on the WTI crude oil. Short-term 4-hour chart, diving down into there. A little bit of indecision over the last, say, 12 hours, but still remains positive, looking likely to break above the 75.85 and target that 76.35 area. On gold, we also saw a really decent reaction on Thursday, with prices rebounding from the support around $1,720, got back up as far as 1765, and even overnight we've got up to 1766. Then we've seen a bearish engulfing candle, and that's been followed by a further bearish candle that we're in the middle of now. That closes at 10 o'clock. So price action down to 1754. I would expect to see support at 1750, 1766, the resistance, and obviously bear in mind this downward trending resistance line which we've run into. So will that be enough to cap the upside on gold and precious metals? I think so at the moment. Silver also stalled at good technical levels, just in front of them, 22.85, and the major one for me is 23.13, just above there. So formed a bit of a shooting star, hanging man candle, and this bearish candle playing out now. So a little bit of pressure coming back onto silver at the moment. So yeah, just be aware of that. Really need to sort, if we do see dollar strength picking up again, we should see these precious metals reverse quite sharply, and that'll keep the pressure on the oil as well. Let's take a look at indices now. Sorry, let me just see. Thanks for letting me know. I'm going through these charts and I haven't been showing you the charts. That was a bit of a foobar. A shame Joe's not here. He would have stopped me. So let's have a quick rundown again. On the oil side of things, the 4-hour chart, we're seeing the 76.35 level as the area of resistance. We saw the reaction higher, and we are basically still looking positive on oil, on the WTI crude oil. The Brent crude oil, obviously, we've got this level up here, just around at $80. On the gold, this is the downward trending resistance that I mentioned. We managed to poke above it, but has then sort of turned around quite sharply and is on the back foot. 1750 should act as support. If it doesn't, and we get down below 1750, that does open up the downside again. Silver, again, that stalled at in front of the technical levels around about 2280, 2285, and looking under pressure at the moment as well. Let's jump back to cryptos. Cryptocurrencies, as you can see, we saw this triangle formation, the break higher from the double bottom, targeted to move to 44,377, and then we've extended higher, as we pointed out on Friday, although we are seeing a little bit of resistance coming in now. Forex, running through the euro dollar again. These are the sort of formations that we're sort of seeing, inverse head and shoulders formations. That's on the back of the dollar weakening ever so slightly. However, resistance just above 116.82 coming in there on euro dollar. A little bit of positive to start the day, looking quite nice at the moment. So potential for a little bit of a correction to stall this sell-off that we've seen over the last week or so. And the same in cable. Look at this inverse head and shoulders formation with resistance now at 135.77. The break above there should open up a move back into this resistance higher. Dollar yen, that's looking a little bit weak at the moment with the dollar under a little bit of pressure, but we can see this really nice run. This we can see this really as a minor correction. We saw this bearish outside candle on Thursday, followed by some negative price action. Started off on the downside today, but have strengthened ever so slightly. So expecting the dollar to come back and maybe bite hard at the start of the week. Let's move on to indices now. So on a weekly basis, on FTSE, bit of indecision. Positive week the week before, bit of indecision last week, opened and closed at the same level. So no real move either way, spikes in both directions. On the daily chart, we're seeing slightly negative price action over the last 2 or 3 days and on the back foot this morning. Also, we saw this basically bullish hammer looking candle, so quite a positive candle after the sell-off down to about 15,000 in DAX, which is a key level. We saw the rally higher and it closed up at 15,229. We've been up to 15,300 this morning, but now under pressure as we go into the European session open. So negativity coming into the European indices at the moment. That's also impacting on the US side of things. So pressure building, as we said from the market highlights at the start, Evergrande situation unfolding, and as it unfolds, even with someone coming in to support that or to take on to take over that Evergrande company, you've still got the fundamental backdrop of the issues surrounding that, and that will be impacting on other firms as well. Positive session again with the S&P we can see on Friday, but negative start today. Aussie 200 last 4 days basically opened and closed around about the same level, so sitting quite nicely just above the support level, break of support, and we should see that downward move accelerate. 14,500 is the level in China. I've been talking about it for a long time, and I expect that to break eventually. So this negative price action that we've seen over the last couple of days, again, expected to accelerate as the week goes on. Support in Hang Seng coming in at 23,688, break below there, and it opens up the downside to a move towards 23,000. 23,000 is pretty key, as you can see from the swing low back here, break below there, and that does open up and move to a further attack on the lows we saw back at the start of the pandemic around about 21,000. Nikkei has given up a lot of its gains over the past 3 days, and again negatively we're seeing a retest of the downward trending resistance line, which should provide some support. However, again, expecting the acceleration, the momentum that we've seen here, it feels like it should go further. So hope that's been pretty informative, and let's take a look at I can't show you the gun to head from Friday. I'll have a little butchers and see what I did with Joe. I was buying gold on Friday, got long at 17.55. Let's see how that did. Gold. Very close to getting stopped out, managed to stay in there, and the market closed slightly on side, around about 1760, so it was on side small, but obviously, as we can see, it didn't quite get up to where I was targeting 1774 and stalled at the 1765 level. So I think for me that could be a bridge too far for gold at the moment. I'll be looking to really focus on the potential for the downside move if we can manage to break 1750. So my gun to head today, I'm going to sell indices. I know we've seen a bit of a turnaround this morning. In the last hour, we've seen markets bounce a little bit, but it just feels like there's more on the downside for the markets. Ideally, I would look to sell higher, around about this 15,300, but as I've got a gun to my head, I'm going to set shorts around about these levels. So in DAX, 15,150. Let's get it here. Really looking for stop. Really has to be pretty tight. Let's put the stop at 15,225. And really looking for just a 2-to-1 risk reward on this, on the DAX. On the downside, looking really to get that back down to these swing lows. If we break those lows, breaks the 15,000 level, then I'd be more aggressive with the target. Yeah, but I'm targeting 15,000. Nice round numbers today. So yeah, that's me on there. What else have we got out today? Economic calendars showing US factory orders expected to rise 0.5%. So markets to watch really are the US dollar crosses, and the OPEC meeting expected to add another 400,000 barrels per day to output for November, despite $80 crude prices. Again, markets to watch will be all based around the dollar. So apologies for not sharing the charts early enough, and hopefully I've covered off a little bit more of that, and I'm sure I'll be a little bit more switched on tomorrow. Thanks very much. Cheers.